The better way to look at it is that right now the competition is so intense among hyperscalers. That's what's driving it. It's not so much about ROI. I think the reason is that in tech, there's always one winner, right? If you look at any of the previous tech evolutions, there's always one winner. So I think the competition is going to remain very intense before we know who the winners are going to be. So that's not going to slow down. So I think it's a little too early to think about ROI from that standpoint.
That's really interesting. So basically, because Google is battling, Amazon is battling Meta, because they're all still fighting to be number one, it's benefiting Nvidia. That definitely makes sense.
And then, of course, there's the other thing, Nvidia, right? Everyone hated Nvidia. Think about the reasons people say don't buy this market. There were the reasons for the last 10 years not to buy Nvidia. It faced all kinds of scorn from the financial media, from Wall Street. It was this, it was that. Well, today, the financial Wall Street has no choice. They're all over this stock. I want to bring in right now one of my favorite guests when we start talking about this, from Spear Investment founder, their CIO, Ivana Delevska. Ivana, step in here for a second. Look at this. These are all the targets that was raised, maybe more by now, right? So Mizuho, Goldman, Bernstein, Citi, Deutsche Bank, Morgan Stanley, Evercore, Barclays, Wedbush, Truist, TD Cowen, Barrick. Then you had a few reiterations, right? Strong buy. Only thing I would say is kind of interesting to me, the targets aren't that high. Not necessarily. The highest we see is 190 from Evercore. Are you surprised that Wall Street has, they're saying buy the stock, but they still seem to be playing it close to the vest?
Well, it's not necessarily surprising because that's how the sell side works. They really look at 1 quarter ahead and they model it. If you want to be looking at the situation correctly, you really need to take a step back and look at it 3 to 5 years out and model the next generations of chips. So the Blackwell is really the upside that we're expecting to see going into next year. And then there is future generations of chips that will come after that. So the key here is whether scaling laws will hold, which will mean that people will have to invest, and whether they're going to be able to execute on this next generation of Blackwell chips.
So let's look at those. So here's NVIDIA's quarterly earnings going back to the fourth quarter of 23. Just the mind-boggling stuff. Data centers, 3.6 billion to almost 31 billion. It was known as a gaming stock for a while. Remember, in the video game stuff, that made a big move. In fact, every one of these categories, data centers, gaming, professional visualization, autos, all came in better than Wall Street consensus. What's going on? They're executing in every facet of their business.
So really what it came down is the guide. They guided to 37.5 billion for the next quarter, which, as you can see here, is not as big of a jump.
Right.
And I think what people misunderstand is this next generation is going to be very different than the Hopper in that it requires actual physical infrastructure build out. So while the Hopper was going into existing data centers, right now you're going to need whole new data centers with all kinds of power requirements, networking requirements.
So that slows it up a little bit here?
Well, that makes it a little more volatile, but it's also going to make the upside larger. So this is why you're seeing networking stocks, power gen stocks really through the roof today, is really because people are realizing, hey, there's going to be significant investment.
But it's got to happen. You like what you heard on Blackwell?
Absolutely. We've done channel checks on Blackwell. The demand, as Jensen was saying, is truly insane. Basically, the prior generation Hopper, people were ordering in the 10, 20, 30,000s.
Nvidia has continuously captivated the stock market with its groundbreaking innovations, and the buzz around its latest architectural masterpiece, Blackwell, has hit a fever pitch. With the incredible ingenuity of its technologies, Nvidia is not just maintaining its hold in the artificial intelligence landscape, it's redefining it. Tech giants like Microsoft, Meta Platforms, and Oracle are lining up to integrate Nvidia's cutting-edge products into their infrastructures. So, what's so enticing about Blackwell that it has these digital behemoths rushing to grab a piece of the action? Stay tuned as we unravel the excitement behind Nvidia's latest chapter in tech evolution. Welcome back, everyone, to Investocracy.
NVIDIA reporting earnings that did beat expectations, driven by surging demand for its AI chips. But as we mentioned earlier, also issuing an upbeat forecast for the current quarter, despite signs of slowing growth. And that's what's got people looking at this stock maybe a little differently. We'll see. Vivek Arya is the Bank of America Securities Senior Semiconductors Analyst. What say you, sir? What do you think? What did you think of last night's numbers?
Yeah, good morning. I think that, before we look at last night's numbers, let's look at what they actually reported and the track record that they have set. So this is not a small company. This is one of the largest, in fact, the largest company. And it just put up a quarter where sales grew 94% and earnings grew over 100%. And they're guiding to a quarter where sales, yes, they're slowing down, but slowing down to a rate of over 70%. And when I look at what they are able to accomplish next year, we think they can grow over 50%. And I was just looking at the other, so-called Max 7. Nvidia will probably grow 4 or 5 times that growth rate next year, and it's trading at less than 1 times earnings growth, whereas the average of those companies is trading at over 2 times earnings growth. So we think the numbers are exceptionally strong, but you're right that they were not able to come close to the so-called whisper expectations. I think part of it is they are just at the start of ramping their new Blackwell product. Supply is just starting to get going. But if I look at the usual range of beats they have versus their guidance, I think that'll probably get us pretty close to where people were expecting the numbers to come in. So I'm not worried. I think this is just quarterly noise, and this is to be expected in the growing pains of whenever they're launching a new product.
So,
the key is
so
that the demand
what do you think the disappointment is here then?
Sorry, can you say that again?
I said, what do you think the disappointment is here? I mean, there was some...
the disappointment is that, the supply chain, is scrutinized very closely. It's followed by a lot of people. And every time the company reports, expectations continue to build up naturally for this size and what the stock has done. But there are always constraints when it comes to not just getting the supply, but actually building the products, getting them to customers. And what we have seen from NVIDIA over the last 2 years is that they are able to beat their own guidance by $2 to $2.5 billion consistently. Last time they guided $32.5 billion and they reported $35 billion. So that's why I'm not surprised to see them not exactly come to the high end of where the whisper expectations are. But if I look at the usual range of beats they have, we will come pretty close, I think, once they actually report the quarter. So I think this is more a case of, expectations in a transitions quarter. It's nothing to do with the long-term fundamentals of the company.
The Blackwell architecture is the new talk of the town, and for good reason. Nvidia's CEO, Jensen Huang, has been a vocal proponent of keeping the company at the cutting edge, pledging to update chips annually. The release of Blackwell is an embodiment of that promise and is now playing a central role in discussions across the tech industry. Blackwell introduces 6 revolutionary technologies, including the most powerful GPU to date, which is already setting benchmarks and creating ripples in high-speed networking. If stock market jokes were as appreciated as Nvidia chips, one might say, investing in other stocks is like using an old GPU when you could have a Blackwell. This humorous nod to Nvidia's prowess underscores its monumental impact on the tech world. Through diligent partnerships, Nvidia has created an extensive supply chain involving key players like Micron Technology and SK Hynix for memory components, and tech stalwarts such as Supermicrocomputer and Dell for product incorporation. Historian views align that even a small hiccup in such a vast supply network could ripple across the tech world, yet Nvidia's extensive network provides a robust safety net and solution path, ensuring a steady production ramp-up. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
And your sense about this Blackwell chip is it's just going to knock it out of the park, or you think it's going to... Is there anybody even in the vicinity competitively at this point?
No. I think they lead the pack for the reason that delivering this product is more than a chip, right? You have to, first of all, be able to put 72 of them in a single rack. You have to connect it with very high-speed optical and copper interconnects. Then you have to have a system and software level approach. Then you need millions of developers who know how to do something with it. And then you need to have a whole range of relationships and not only the supply chain, but with relationships with the enterprises, with the cloud companies. And I think that is unparalleled. The other thing to keep in mind is they are in an industry, large language models, where the technology is changing several times a year, right? And their ability to deliver a new product cycle, they have accelerated from 2 years to 1 year. Even that is not sufficient. So we think there's another few years of build out that is left to support this rapidly growing industry.
Vivek, this is maybe a longer term challenge, if you believe it is a challenge, but there is a debate taking place inside the large language model world right now about whether the models themselves, the scaling of the models is happening at the same pace it used to, meaning this sort of hockey stick angle is slowing down. Obviously, you saw Sam Altman take to Twitter, I think, last week and say there is no wall, meaning there is no slowdown. But what is your take on what's happening here?
Sure. I think, when we look at the technology industry, right, we used to have Moore's Law, and I've been following this industry for a while, and every year people have been pronouncing the death of Moore's Law. And here we are almost, 50 years later, and one version or another just keeps on going. When we look at the field of large language models, it started last year, right? So we are just kind of in the first 1 or 2 years, but I think it's expected that the industry is going to take a step back. In fact, we saw a Microsoft CEO just address this issue 2 days ago. He said that he's not seeing any kind of slowdown in scaling. And it's not just one company driving it. This is a global industry. So you have many different companies driving it in the direction of training, in the direction of inference. So we do think that, it's expected for the industry to, pause and reflect from time to time. And instead of changing the nature of these models 3 or 4 times a year, maybe they change it 1 or 2 times a year, right? But the point is that the amount of computing infrastructure that is required just to address what is already there is going to take a few years to go and deploy. So we're not worried.
What do you think for those folks out there who either own the stock, want to own the stock, or thinking about what to do with the stock, what do you think the fair value of the stock is?
Yeah, technology stocks tend to trade between 1 to 2 times their earnings growth rate. We have their earnings growing over 50% next year, and the stock is trading over 30 times next year. So we still think that it's a very compelling valuation, even though it has run a lot. So it really depends on earnings growth. And as I mentioned, when I look at the other so-called Mag 7 in the industry, they are trading at over 2 times earnings growth. So using that specific valuation metric, we still think NVIDIA is very compellingly valued.
Demand for Blackwell GPUs is surging. Giants like Microsoft, Oracle, and OpenAI, whether through tweets or executive comments, make no bones about their reliance on NVIDIA to fuel their AI initiatives. Larry Ellison's playful claim of begging for more GPUs simply reflects how indispensable NVIDIA has become. Meta and Alphabet's enriched AI infrastructures echo a similar sentiment. With such strong demand driven by well-heeled tech firms, Blackwell is poised to become a game-changer, securing NVIDIA's growth trajectory further. NVIDIA's recent stock fluctuations also hint at its ongoing success story. While a slight dip in gross margin is predicted for initial Blackwell launches, considered normal due to multifarious processing requirements, the long-term outlook is much brighter. As production scales, NVIDIA forecasts stabilization toward the mid-70% gross margin, aligning with robust revenue growth. Indeed, NVIDIA is positioning itself as a linchpin in the AI revolution, effectively holding a premium market position. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
NVIDIA reported third quarter results that beat expectations for sales and earnings, and the AI chipmaker delivered a better than expected forecast. Earlier, the stock had been down a little bit, down by about 2.5%. Right now, it's only down by about 0.8%. Joining us right now to talk about it is Ray Wang, Constellation Research founder, chairman, and principal analyst. Hi, Ray. How are you?
Hey, good morning.
So did the decline in the stock price make sense to you? Is this just a case where NVIDIA can beat expectations, but it's almost impossible to beat the highest whisper numbers on the street ever? There are just such high expectations built into this stock every time. This is not a big sell-off. It's down by less than 1%.
Becky, you're absolutely right. I think people were taking money off the table. It was more than a mic drop moment. It was a spike the ball in the end zone performance. But the problem was everyone saying, hey, what's going on, right? Should we take some money off the table and come back? And I think that's really what happened. I mean, these were some big numbers, right? 19.83 net income, 37.5 billion in guidance. That's huge.
Yeah, it's hard to find many flaws or faults at all with the numbers that came through. It does remind me of last quarter when they beat expectations again. The stock was down immediately after the earnings, but then it went on to grow something like 17% over the course of the last 3 months since then. You've still got to buy on this. You're looking at, I think, a $180 price target. The stock's at $144 today.
I am, and here's why. When we look at the Mag 7, they're basically growing exponentially versus the rest of the Fortune 500. So 7 stocks are basically growing really quickly, and Nvidia is basically selling to 6 of the 7 of the Mag 7, and it's a huge number. It's about $50 billion a quarter in which these Mag 7 are spending in terms of data center growth. And so that's really what's driving the majority of Nvidia's revenue in the data center side. So that growth from $3.8 billion to $30.8 billion in 2 years is huge, right? Gaming doesn't even come close. Gaming was up at $3 billion. And so what we're seeing right now is still a massive build out on data centers. That's going to happen for the next 12 to 18 months. And that's what's driving it. And then after that, we're going to see something different, which is in the sovereign AI. Countries are going to say, hey, our companies can't catch up, and we've got to invest at a country level.
Yeah, I've heard people knock NVIDIA because it's really just these big companies like the Metas and the Amazons that are buying all the chips right now. But that's because they're first in line. Nobody else can get through to them. When you hear about the demand that NVIDIA will discuss, Jensen Huang will discuss on the conference call, it's hard to look at the supply versus demand as a problem. It just means far more people want these chips than they can possibly produce at this point. If you were looking for a hole to poke, because most of the holes that I've heard people try and poke in this argument don't make sense to me, what's the best argument you can think of for why you might be concerned about the stock?
The only reason I'd be concerned about the stock is living in the valley. What we're seeing is a ton of people at NVIDIA retire. They put in their 5 years, they put in their 10 years, they're leaving, they're cashing out, they're doing something with their lives. And it's really the talent that's going to be hard to beat given that stock run up. The other piece is really Blackwell to Rubin when it happens in 2026. The question is, same questions people are going to ask, are the chips going to be hot? Are they going to work? I think that's where people are worried about. But right now, these chips are 2.5 times faster. And of course, they cost 2x as much. And people are willing to make that bet.
As Jensen Huang's foundation navigates the demands of rising assets, NVIDIA continues to lead with innovation and fortitude, reflecting not just in market movements, but in philanthropy as well. With NVIDIA stock's impressive performance backdrop enhancing Huang's foundation, doubling its charitable contributions becomes an equally exciting narrative. The foundation, which supports causes across education, health, and STEM initiatives, is a testament to strategic future planning, ensuring resources remain impactful over time. NVIDIA's growth trajectory, emboldened by a nearly 200% stock increase this year, sets a compelling case for investors, as projections suggest continued gains with Blackwell as NVIDIA's linchpin. Now could be a pivotal moment to invest. What do you think about NVIDIA's market position and philanthropic impact? Could this be your opportunity to ride the next wave of AI advancement with NVIDIA's Blackwell? Share your thoughts. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen.